If you were born before 1966, I need you to stop what you are doing and watch this entire video. Because in 2026, there are specific changes, deadlines, and decisions inside the Social Security and Medicare system that apply directly to your birth year. And the consequences of missing them are not small. They are permanent. The Social Security Administration will not call you. They will not send a personalized letter explaining what changed and what it means for your specific situation. They update the rules, post them somewhere on ssa.gov, and assume you already know. What I'm going to do today is go through every major thing happening in 2026 that affects people born before 1966, by group, by birth year, by exact dollar impact, so that by the end of this video, you know exactly where you stand and exactly what to do about it. Share this with your family before the end of the video. I will tell you why that matters in a moment. People born before 1966 fall into 4 distinct groups inside the Social Security system. Each group has a different full retirement age, different claiming options, different Medicare rules, and different mistakes that can permanently reduce their income. I am going to go through each group one at a time. Find yours, listen to what applies to you, and at the end I will give you a clear action list for exactly what to check and what to do right now. Group 1. Born between 1943 and 1954. You are between 72 and 83 years old in 2026. You have been on Social Security for years. Your full retirement age was 66. And if you are like most people in this group, you have stopped paying close attention to your benefit because you assume everything is locked in and there is nothing left to check. That assumption is costing some of you real money every single month. Here's the first thing people in this group must look at right now. Are you collecting the right benefit? A significant number of widows and widowers in this age range are collecting their own retirement benefit when they would receive more on their late spouse's record, or the other way around. The survivor benefit for a widow or widower can be up to 100% of what the deceased spouse was receiving. In many cases, that number is substantially higher than what the surviving spouse receives on their own record. If you lost a spouse and you have not specifically asked SSA to compare both benefit amounts and put you on the higher one, there is a real chance you have been leaving money on the table for years, not months, years. Call SSA at 1-800-772-1213 and ask them to pull both figures, your own retirement benefit and your survivor benefit, and compare them directly. That call is free. The difference it can make is not. The second issue for this group involves Medicare, specifically a surcharge called IRMAA, the Income-Related Monthly Adjustment Amount. If your income was higher in a previous year, due to a one-time event, a sale of property, a Roth IRA conversion, a year of higher work income Medicare may still be charging you extra based on that old income right now. IRMAA surcharges range from an extra $70 to nearly $500 per month added on top of your standard Part B premium, every single month, automatically deducted from your Social Security check. The appeal form is SSA 44. It exists specifically for people whose income has dropped due to a life-changing event, retirement, loss of a spouse, reduction in work hours, or a one-time income spike that no longer reflects your current situation. You file it. You show what your income actually looks like now, and the surcharge gets reduced or eliminated. If you are paying more than $185 a month for Medicare Part B right now, you need to ask why. The standard 2026 rate is $185. Anything above that is an IRMAA surcharge, and you may be able to appeal it. Download Form SSA-44 at ssa.gov or pick it up at any Social Security office. One more thing for this group. Required minimum distributions. If you have a traditional IRA or 401k, you are required to take distributions every year starting at age 73. In 2026, the rules around RMDs and how they interact with your Medicare premium calculation are worth reviewing with a tax professional. A poorly timed or incorrectly calculated RMD can push your income above an IRMAA threshold and trigger a surcharge for the following year. One conversation with a CPA now can prevent a 12-month surcharge that starts in 2027. Group 2. Born between 1955 and 1959. You are between 67 and 71 years old, and this is one of the most critical groups in 2026 because the rules are genuinely different for every single birth year in this range, and most people in this group do not know their specific number. Here is your full retirement age breakdown. If you were born in 1955, your full retirement age is 66 years and 2 months. Born in 1956, 66 years and 4 months. Born in 1957, 66 years and 6 months. Born in 1958, 66 years and 8 months. Born in 1959, 66 years and 10 months. That is your number. Not 66, not 67. Your specific month and year. And that specific number determines the exact size of your permanent monthly benefit for the rest of your life. Here is why this matters so much right now. People in this group are making or have recently made their claiming decision. And the difference between getting it right and getting it wrong is permanent. If you claimed at 62 and your full retirement age was 66 and 6 months, meaning you were born in 1957, your benefit was reduced by approximately 25.8%. On a benefit of $2,000, that is $516 less every single month. Not temporarily, permanently. Over 20 years, that is $123,000. If you have not yet claimed and you are past your full retirement age, every single month you continue to delay adds 0.667% to your benefit permanently. That compounds to 8% per year. Between your full retirement age and age 70, you can accumulate between 24 and 32% more per month for life, depending on your exact birth year. On a $2,000 benefit, that is up to $640 more every single month, permanently. For people in this group who are currently working and collecting Social Security before reaching their full retirement age, the earnings test applies in 2026. If you earn more than $23,400 in a year, SSA withholds $1 for every $2 over that limit. The money is not gone permanently. It gets credited back once you reach full retirement age. But if you do not know this rule, a reduced or missing check can look like an error and trigger panic decisions that make things worse. There is also a Medicare issue specific to this group. If you turned 65 and enrolled in Medicare but are still working with employer coverage, you need to confirm your coordination of benefits setup is correct. Specifically, which coverage is primary and which is secondary. An error here can result in claims being denied or paid at the wrong rate, and the window to correct enrollment mistakes without penalty is limited. Group 3. Born between 1960 and 1965. You are between 61 and 66 years old. Your full retirement age is exactly 67, and right now the decisions you are approaching, or have recently made, will define your income for the rest of your life. If you have not yet claimed, here is your situation in plain numbers. Claiming at 62 with a full retirement age of 67 reduces your monthly benefit by 30%, permanently. On a $2,000 monthly benefit, that is $600 less every single month for the rest of your life. Over a 20-year retirement, that single decision costs you $144,000 compared to waiting until 67. The SSA will process your early claim without warning you about this. They will ask if you understand that your benefit will be reduced. You will say yes. The reduced amount becomes your permanent number. They move on. For anyone in this group who is approaching 62 and thinking about claiming early, run the actual math before you file. The SSA will not run it for you. Now here is something most people in this group are not aware of. If you have already reached your full retirement age of 67 and have not yet claimed, you can request up to 6 months of retroactive payments when you do file. SSA pays you as if you had applied up to 6 months earlier, which means a lump sum of up to $12,000 with your first check on a $2,000 monthly benefit. The trade-off is a slightly lower ongoing monthly benefit since your official start date moves back. The option exists. Almost nobody asks for it. The most important action for people in this group who are still 2 to 6 years away from claiming is this. Check your earnings record right now. Go to ssa.gov. Create a My Social Security account if you do not have one. Open your Social Security statement. Look at the earnings listed for every single year you have worked. Compare them against your own records. W-2 forms, old tax returns, pay stubs. Here is why this matters so much at your age. One incorrect year, an employer who submitted the wrong payroll amount, a period of self-employment that did not get recorded correctly, reduces your monthly benefit by approximately $100. If your record has 3 incorrect years, your benefit is $300 a month lower than it should be. Over 20 years, that is $72,000. And the documentation to prove the correction, old W-2 forms, tax records, pay stubs from the 1990s, gets harder to find every single year. Check your record today while you still have the paperwork. The correction is free. Finding the documentation in 10 years may not be possible. There is one more thing for people in this group approaching Medicare eligibility at 65. Medicare open enrollment for Part D drug coverage runs from October 15th through December 7th every year. Missing this window, or enrolling late without qualifying employer coverage, triggers a late enrollment penalty that is added to your Part D premium permanently. It is calculated as 1% of the national base premium for every month you are eligible but not enrolled. On a $36 base premium, a 12-month gap costs you an extra $4.32 per month, permanently, on top of whatever plan you eventually choose. Small number, but permanent, and the SSA will not remind you before the window closes. Group 4. Born before 1943. You are 83 or older. Your full retirement age was 65. You have been receiving Social Security for a long time. And for most people in this group, the active claiming decisions are behind you. But there are two things people in this group must check right now. And both involve money you may be leaving on the table every single month. The first is the survivor benefit issue I mentioned in Group 1, and it is even more critical for this age group. If you are a widow or widower, and you have been collecting your own retirement benefit for years without ever asking SSA to compare it against your late spouse's survivor benefit, there is a real possibility you have been receiving less than you are entitled to, potentially for a decade or more. The dollar difference can be substantial. Call SSA at 1-800-772-1213. Ask them to compare both benefit records. If the survivor benefit is higher and you have not been receiving it, ask what can be done. The second issue is Medicare savings programs. These are federal programs, QMB, SLMB, and QI, that can eliminate your Medicare Part B premium entirely, cover your deductibles and co-payments, and reduce your out-of-pocket costs to near zero. The income thresholds are higher than most people assume. A single person with monthly income under approximately $1,350 may qualify for QMB, the most comprehensive tier. If your income is up to around $1,816 per month as a single person, you may still qualify for SLMB or QI, which at minimum eliminate the $185 monthly Part B premium. These programs do not enroll you automatically. Nobody signs you up. You have to apply. Call 1-800-MEDICARE or go to Medicare.gov to find your state Medicaid office and start the application. One application. That is the only thing standing between you and potentially hundreds of dollars a month in eliminated costs. Here's why I asked you to share this video with your family at the beginning. The people most affected by these mistakes are often the people least likely to find this video on their own. A widow in her 70s who has been on Social Security for years and does not know her survivor benefit may be higher. A parent approaching 62 who is about to make an irreversible 30% reduction to their income without understanding the math. A sibling who is paying an IRMAA surcharge every month based on income they no longer earn and does not know the appeal form exists. These are not complicated problems to fix. They require one phone call, one form, or one 10-minute login to ssa.gov. But they require knowing the information first. That is what this channel exists for. And one share from you today could change someone's financial situation for the rest of their life. Share this video. Tag someone who needs to see it. Here is the full summary by group. If you were born between 1943 and 1954, check whether you are on the right benefit record, especially if you are a widow or widower. Look at whether you are being overcharged on Medicare through an IRMAA surcharge and file form SSA 44 if your income has dropped, and review your RMD timing before it triggers a higher Medicare premium for next year. If you were born between 1955 and 1959, know your exact full retirement age down to the month. Understand the permanent consequences of claiming early. If you are working and collecting before your full retirement age, know the $23,400 earnings limit, and confirm your Medicare coordination of benefits if you have both employer and Medicare coverage. If you were born between 1960 and 1965, understand what a 30% permanent reduction means in real dollar terms before you make any claiming decision. Ask about the retroactive lump sum option if you are past full retirement age and have not yet filed. Check your earnings record at ssa.gov today and correct any errors while the documentation is still findable. If you were born before 1943, call SSA and ask them to compare your own benefit against any available survivor benefit. Check whether you qualify for Medicare savings programs that can eliminate your Part B premium entirely. For every group, the SSA will not bring any of this up on its own. It processes your application, sends your check, and moves on. Everything I covered today requires you to know it exists and take one specific action yourself. Go to ssa.gov. Open My Social Security, check your earnings record, and if you have a family member who is in any of these groups, share this video with them today. One conversation can change their financial situation for years. Subscribe, and I will see you in the next one.